In today's video, we're going to be looking at actionable signals. We're going to be using the STRAT, so stick around. It starts right now. So this is how I set it up on the scanner. Then I'll look at these. These are within my watch list. I don't scan the whole market because it's just overwhelming. It's just way too many to be looking at everything. So I just key out my watch list and then we go from there. Okay, let's look at Facebook. Okay, this is Facebook. This is today's candle. This one right here. This is a broadening candle. This is a outside candle. If you're using the STRAT, you'll understand that this is a 3 candle. This is a 3 candle because it broke outside the top and broke outside the bottom. Being this color of a candle, you know that the price started here, went down here, blew past the bottom of the previous day, and broke above the top of the previous day and settled in the middle. This is price action trading, and this is what is so important for you to memorize and to get your eyes fixed on looking for when you're trading. And using the STRAT is excellent. It is the most powerful thing I've ever used trading. This is awesome. It has turned my game around. It's incredible. Anyway, so knowing that this is happening here today, what could we have done? How could we have used this information to the best of our knowledge? Well, we know that it went from here and then broke down the bottom, okay? And when it starts making its way back, we kind of, before it goes across the top of the previous day, it is a 2. Okay, it is a 2 candle because it only broke on one side of the previous candle. So it broke down, it went up, and we're waiting and we're waiting and waiting till we get confirmation till it breaks across the top, which probably did more 60%, 70% into the day. How could we play this and how can we see what's happening here? Glad you asked. It's very simple. Looking at this, we look at the range of the previous candle. Let's blow this up here. Okay. We know, again here, down, up, crossed. Okay. So what can we do at this point in anticipation of what this is going to do for the day? And we're looking at this, and of course you're going to trade. If you're day trading, you're going to trade on a smaller time frame, 5, 10, 15 minute, whatever. But you need to use this as your guide, okay? And there is a method that is out there by Sarah, the STRAT Sniper. She's got a YouTube channel. Please go check her out. And she is incredibly smart and understands how this works perfectly. And I watch a lot of her videos. I watch Rob Smith in the Black, and I mean he loves this. Love Sarah, and we all love her. She's great. Anyway, look at the previous candle, okay? And if you can see that you are getting close to surpassing the 50%, the midpoint of the previous range in that candle, then you can start to gear up and get ready to jump in and go in the direction it's going. So for example, this candle here, the bottom was at 189.78, the top was at 196.64, something like that. So do the math, cut it in half, and then you'll find your mid-range. You can use the Fibonacci retracement if you want to be very specific. So what you want to do is just go from the bottom to the top and click the range, that's it. Look for the 50 mark. Okay, let's get out here so we can see it. And the 50 mark looks like at 198.17. Let me draw a trend line there so we can mark it and see exactly where we're at. Okay, so there we go. Okay, I'll get rid of this Fibonacci now. We don't need it anymore. Okay, So this red here is the 50% range. This is the 50% mark on the previous candle. Okay, 193.20. Okay, so we know this candle went down and broke below this, but it started coming back up. So we anticipate that it could turn into a 3 and go beyond the previous day candle. So do we wait at 196.64 for clearance and then write it up for 20 cents or 30 cents? No. What we can do is we can watch this, and once it starts passing this mark here, this 50% mark, this halfway point, we can actually go into a trade. So what happened was the stock continued to go up. It went up and up and up and up and up and topped out at 196.67 or 93 or whatever that exact number is, and then it starts to retrace back down. So on its way back down, you would go ahead and sell. You put in your sell and then boom, you're out. Okay, let's say after it's retracing back to about this point here, you decide to get out of the trade, which is great because guess what? You already made a profit because you anticipated and you were willing to risk how much? Just a few dollars, $5 or whatever it was per share for that. So you made yourself a profit. Where did you set your stop? Again, that's up to you. If it was me, I would set it once I got in and it started going up. That's where I would set it. Where you do, it's up to you. Again, 5% rule, whatever the percent rule. Me, I don't want to lose that much, so I'd go ahead and I put a tight stop, and that's it. But the beauty of this, as this is going through the day, you can constantly just be moving your stops up and up and up and up and up. So let's say you put it at that point of that candle, okay? And then let's say you didn't sell. You just put your stop up. You just kept putting your stop up until you were comfortable and it started retracing and boom, you're out. That is the best way to play it. If you're in front of your computer and you can move your stops and stay with the trade, that's the best way to do it. But the lesson here is very simple. Look for this broadening formation. Look for this outside number 3 STRAT candle to where it blows out both sides. This is called an actionable signal, okay? Be well aware of that term, an actionable signal, okay? Let's look at another ticker. Okay, I'm back here. Let's look at something that went down, and let's see. Let's look at Netflix. All right, here we go. We are looking at Netflix right now. The previous candle was a 1 because it did not break above or below the previous day's candle. So what do we have today? We had a starting point here at about 202.14, bounced up, crossing the previous day's candle. So it was a 2 to the up, and then it just collapsed and went down. Broke the bottom of the previous candle, and then bounced up a little bit. So what could we have done? Same exact thing. Let me make this bigger so we can really see what's happening here. Again, we saw that it went up and it came down. So knowing this, what could we have done? This is an actionable signal again. The 3 surpassing both sides of the previous day's candle. But what could we have done in anticipation? Get your Fibonacci. All right. And let's draw a trend line. And 50% would have been like right here. And 50% would have put us at about 256, somewhere in that ballpark. Okay, let's get rid of our fib. And that is our mark on the previous candle. That's what we're looking at. So as this price action went up and then started coming back down, we could anticipate again in looking at this 50% at $200.55, when the candle or when the day's trading and price action came down to 255 or 60 in that ballpark, we know that we are already at 50% of the previous day's candle. Okay? And knowing that, we could get in again. You get in your trade and then set your stop. Set a stop as this thing is going down. If it's going in the direction that you're anticipating, which in this case we're going short, so it's going down, we want to set a stop. We want to set a stop very close to where we got in. Okay, so as this price action, if you follow this line, this is what's happening as the price action is going down. So what you want to do is you want to follow it down again with your stop. So now you have a stop set well into profit. So worst case scenario, if it bounces back at this point and does not become a 3 and just goes ahead and peters out and bounces back up, guess what? You're out with a profit. You're out with money in your hand. That is a great feeling. That is awesome. So what you do, again, this is price action. It's going, 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 it's going. And okay, now we are already past the previous day low. A lot of people use this as their guide to where to set their stop and get out of the deal, because that's a signal right there that shows you it's going to have to do a lot to really push past the previous day's support. And looking at this candle, it did. So what happened is the price action just kept going down, going down, going down, going down, hit, and then bounced back up and closed the day. So again, what are you doing? You're moving your stop, you're moving your stop, you're moving your stop. And if you would have put your stop here at the previous day's low in anticipation of it touching it or going or bouncing off of that area, you would have been out. But guess what? You would have been in the trade at like 199.80. You would have been out of the trade shorting this thing at 198.07. That's a pretty good little profit on a short. Again, this is actionable signals. You must understand this. Again, this is the beauty of the STRAT. Okay? It's simple. It's not rocket science. If I can figure this thing out, then you can too. You can figure this thing out. But I have to be honest, it takes time. It takes a lot of time to sit there and just look at charts with this new mentality. You've got to be very open and understand what's happening and how the STRAT works. And you will be successful. I guarantee it. I guarantee it. But it takes time. And if you continue to watch my videos, I'm going to continue on trying to show you more ways how this STRAT works, how this method works. And my hat's off, and this would not be possible for me to even be here if it wasn't for Rob Smith coming up with this idea. And people like Sarah, the STRAT sniper, which she is. She's an excellent trader, and she's an excellent teacher. So Rob Smith in the Black and Sarah STRAT Sniper, go check those channels out because they are extremely informative, educational, and fun. And again, I'm going to be going through this every time I go through a chart. It's going to be based on the STRAT method. I don't go over all those trend lines and everything like that because I need to know what's happening right now. I don't need to know what happened last 5 candles or anything like that. I need to know exactly right now, and I'm trading on price action. I don't really follow the fundamentals too much because I'm watching exactly the emotion and the psychology of the market just by watching these candles. And that's what you can do as well. Understand what's happening with the psychology of these people that are trading. You can do that just by watching the candles. All right? Good luck trading out there. Keep with the STRAT.